All right, everybody, welcome back for another deep dive.
Glad to be here.
Today, we're going to be diving into the world of Bitcoin
Yeah.
and looking at its relationship with the economy, especially with some of these recent events.
Right.
And we're going to be looking at a really fascinating article from Crypto Insiders.
Okay.
And it was published on January 5th, 2025.
All right.
And it's called Bitcoin Holds Its Breath for Crucial Report this Friday.
Oh, this Friday. Okay.
Yeah, so this week could be very important.
Interesting.
If you remember back in late 2024, Bitcoin was doing incredibly well.
Oh, yeah.
It reached a peak of $108,000.
That's amazing.
But since then, it's kind of been on a little bit of a
Roller coaster.
roller coaster, yeah.
Yeah, it has been pretty volatile.
The article refers to it as a correction,
Right.
but I think for a lot of people who are not
Not expert.
experts, yeah, they might not really know what that means.
Sure.
So what exactly happened to Bitcoin's price?
Well, after reaching that incredible high,
Yeah.
of $108,000, it fell to around $91,000.
Wow, so that's a pretty big drop.
Yeah, it's a significant decline in a short period, which
Yeah.
really shows how volatile it can be.
So the article points to the U.S. Federal Reserve
Right.
as kind of a reason for this downturn.
Okay.
But again, I think for a lot of people who don't follow economic news,
Mm-hmm.
they might not even know what that is.
Sure.
Who is the Federal Reserve and why are they so important?
Yeah, the Federal Reserve, often just called the Fed, is basically the central bank of the United States.
Okay.
You can think of them as the folks who control the flow of money in the economy.
Got it.
And they do this in part by setting interest rates.
Okay.
And interest rates determine how much it costs to borrow money.
So what did the Fed do that really spooked the markets? And
Yeah.
the article mentions that they were hawkish.
Exactly, yeah. So in December of 2024, the Fed took a much more hawkish stance than anticipated.
Okay, so hawkish for those of us who don't know.
Right.
What does that even mean?
Well, imagine the Fed is like a hawk guarding its nest. It's protective of the economy, and it's ready to act quickly to fight off any threats, especially inflation.
So they're really focused on keeping inflation under control,
Yes, exactly.
even if it means kind of slowing down the economy a bit.
That's right.
Okay.
So at first, the markets were expecting 3 rate cuts in 2025.
Okay.
Now, these cuts would make it cheaper to borrow money, encourage spending and boost economic growth.
Right.
But then the Fed came out and said they only anticipate 2 cuts, not 3.
Oh, wow.
Yeah, and that might not seem like a big deal,
Right.
but it was a major signal that they're taking a more cautious approach.
Yeah, because if everyone's expecting 3 cuts and then they're like, oh, just kidding.
Yeah.
It's only going to be 2.
Yeah, it definitely shifts things.
Yeah, that makes sense.
And that shift from optimism to uncertainty really rattled investors,
Yeah,
especially those who are holding assets like Bitcoin that are known for their price swings.
right. Bitcoin's very volatile.
Yes, very much so.
Which brings us to this week and why Friday is so important for Bitcoin.
Exactly.
The article mentions a crucial report coming out on Friday.
Uh-huh.
What is that?
So you're talking about the U.S. jobs report,
Okay.
which is released monthly.
Okay.
It's essentially a snapshot of the health of the U.S. job market.
So it tells us.
Yeah, it tells us how many jobs were created or lost the unemployment rate.
Okay.
All those important indicators.
Got it.
And this Friday's report is particularly important because it follows a slight uptick in unemployment last month.
So is that a red flag?
Well, it's something to keep an eye on.
Okay.
We want to see if the U.S. economy is truly strong or starting to show some weakness.
Okay.
And this is where things get really interesting for Bitcoin,
Okay.
because the performance of the economy can directly influence the Fed's decisions on interest rates,
Got it.
which in turn can impact Bitcoin.
So a weaker jobs report could mean that the Fed will be more likely to cut interest rates,
Potentially, yes.
which then could be good news for Bitcoin.
That's the question we'll explore next.
All right, so stay tuned, everybody. We'll be right back. All right, so we're back, and we were just talking about how this Friday's jobs report could be a big deal for Bitcoin.
Yeah, it could.
But I'm still a little fuzzy on why a weaker jobs report, which sounds like bad news for the economy,
Right.
could actually be good news for Bitcoin.
Okay. Yeah, so it all comes back to the Fed and interest rates.
Okay.
So if the jobs report is weaker and shows the economy slowing down,
Okay.
the Fed might feel pressure to actually cut interest rates to help stimulate things again.
Okay, so lower interest rates would mean...
Yeah, it means it's cheaper to borrow money for businesses to, expand,
Oh,
invest, hire more people.
got it.
And it also means consumers can borrow more easily for things like homes and cars.
So it kind of creates like a chain reaction.
Exactly.
A weaker jobs report could lead to lower interest rates.
Right.
Which could then boost economic activity.
Exactly.
Okay, I see.
Now here's where Bitcoin comes in.
Okay.
Historically, Bitcoin has often benefited when interest rates fall.
Interesting.
You see, when interest rates are high, investors can get a decent return by just putting their money in relatively safe assets like bonds, savings accounts.
Yeah.
But when interest rates are low,
Yeah.
those safe havens become less appealing.
So they start looking for other places
Exactly.
to put their money.
They want to get those returns.
Right.
So they might look to riskier assets.
Okay.
With potentially higher returns, and that's where Bitcoin comes in.
Okay.
You know, it's known for its price swings.
They're very volatile.
Very volatile, exactly.
So it's like a seesaw almost.
Yeah, you could think of it that way.
As interest in those safer investments goes down, interest in Bitcoin goes up.
Potentially, yes.
Makes sense.
Yeah.
But there's another piece to this puzzle, right? The article also mentions inflation and how Bitcoin is often viewed as a hedge against it.
Yes. That's an important point.
Can you explain that a little bit more?
Sure.
Especially for someone who's not an economist.
Okay, think of inflation like a sneaky thief
Okay.
that's stealing the value of your money.
Okay.
Let's say you have $100 today, and you can buy a nice basket of groceries with it.
Okay.
But if inflation is high next year, that same $100 might only get you half a basket.
Oh, no.
Your money has lost some of its purchasing power.
Wow. That's a great way to put it.
Right.
So how does Bitcoin protect against this inflation thief?
Well, unlike traditional currencies, which governments can print more of,
Right.
Bitcoin has a limited supply.
Okay.
There will only ever be 21 million Bitcoins.
Got it.
So this scarcity is one reason why some investors see Bitcoin as a store of value that can hold its worth even when other currencies are losing purchasing power due to inflation.
So if you're worried about inflation eroding the value of your savings, you might turn to Bitcoin as a way to kind of protect your wealth.
That's the idea.
Okay.
It's important to remember, though,
Yeah.
that Bitcoin is still relatively new,
Yeah.
and it's a volatile asset. It's not a guaranteed hedge against inflation.
Right.
And its price can fluctuate.
Wildly.
Wildly, yes. But the idea of Bitcoin as a potential safe haven during times of economic uncertainty is gaining traction.
Interesting. Okay, so it's not just about this week's jobs report.
Right.
We also need to keep an eye on inflation.
Yes.
The article mentions some key inflation reports coming out next week.
It does.
How do those fit into this whole picture?
Well, those reports are going to give us a better understanding of whether inflation is actually cooling down like the Fed wants it to,
Right.
or if it's still a major concern. If those reports show that inflation is stickier than expected, it could push the Fed to keep interest rates higher for longer, even if the economy slows down.
So even if the jobs report this Friday points to a weaker economy, the inflation reports next week could throw a wrench in things.
They could.
And keep the Fed from cutting rates as quickly.
Potentially, yes.
Wow.
The Fed has a tough job right now, trying to balance keeping inflation under control, but also not wanting to completely stifle economic growth.
That's a tough balancing act.
It is.
So their decisions will have a big ripple effect on all sorts of assets.
Right.
Including Bitcoin.
Exactly.
Okay, so this is all starting to make sense now.
Yeah.
We have these two major economic forces.
Yeah.
The jobs report, reflecting the health of the economy.
Right.
And the inflation reports
Yes.
that indicate how prices are behaving.
Right.
And both of these can influence the Fed's decisions on interest rates,
Exactly.
which, as we've discussed, can impact Bitcoin's price.
It's all connected.
Wow, it's complicated.
It is a complex interplay of factors, and
Yeah.
there's no easy answer to how this will all play out.
But understanding this can help you make better decisions
For sure.
if you're interested in Bitcoin.
Absolutely. Informed decisions are key.
So speaking of informed decisions, what does all this mean for someone who's interested in Bitcoin but maybe doesn't have a PhD in economics?
Right. Wait, should they be buying, selling, or just holding tight this week?
Well, that's the million-dollar question, isn't it?
Yeah, it is.
But remember, I can't give financial advice.
Of course, of course.
It all depends on your individual circumstances,
Yeah.
risk tolerance, and your investment goals.
Everyone's different.
Exactly.
But let's shift gears a little bit
Yeah.
and dive deeper into how rising interest rates actually impact the economy.
Or,
You mentioned that it affects borrowing costs.
yeah.
Can you walk us through that a little bit?
Absolutely. So when interest rates go up, think of it as the cost of borrowing money is increasing.
Okay.
So businesses that need to take out loans to expand or invest, they have to pay more in interest.
Got it.
And consumers who want to buy a house or a car with a loan, they also face higher monthly payments.
So it becomes more expensive to do the things that kind of fuel economic growth.
Exactly.
Interesting.
And as those costs go up, people and businesses might start to pull back on their spending.
And investing. And this can then lead to slower economic growth, which is why sometimes the Fed will lower interest rates.
To try to stimulate the economy again.
Exactly.
Okay, that makes sense.
Yeah.
So this Friday's jobs report will give us a glimpse into whether or not the Fed's recent hawkish stance is already having like a noticeable impact on the economy.
Yeah, it's a key piece of data that they'll be watching very closely.
So to recap, we've got this intricate dance between Bitcoin interest rates and the overall economy.
Yes.
We have the jobs report this week, which reflects the health of the economy.
Right.
And then we have those upcoming inflation reports next week.
Yes.
Which show us how prices are behaving.
Exactly.
Both of these can influence the Fed's decisions on interest rates.
Right.
Which then creates those ripple effects in the crypto world.
You got it.
It's a lot.
It's a fascinating dynamic to watch unfold.
It really is. It's like a real-life economic thriller.
I like that.
But before we wrap up, I want to touch on one more thing that the article highlighted.
Right.
The idea that even if a weak jobs report leads to those rate cuts that a lot of investors are hoping for, it might not be the only factor driving Bitcoin's price.
Right.
Are there other forces at play that we should be thinking about?
Absolutely.
Yeah, it's like we can look at the jobs report, we can look at the inflation report and think, okay, this is what's going to happen.
Right.
But Bitcoin could still just do its own thing.
Oh, absolutely. Bitcoin is known for being unpredictable.
Exactly.
You know, it's tempting to only focus on these immediate economic indicators.
Right.
But there's always a bigger picture. Like, for example, regulatory changes around the world. Those can have a huge impact on Bitcoin's price.
Okay, so government's getting involved?
Exactly.
Could shake things up a little bit?
A new law or regulation could either boost confidence in Bitcoin or create uncertainty.
Got it.
And that uncertainty can lead to some pretty big price swings.
Yeah. So we'll have to see what happens on that front.
Definitely something to keep an eye on.
What about like technological advancements?
Oh, yeah.
In the crypto world itself.
Right.
Could those also like throw a wrench in things?
Absolutely. Bitcoin isn't static.
Okay.
There are always new developments happening, you know, improvements to the technology, new applications being built on top of Bitcoin, even new cryptocurrencies emerging.
Right, competing with Bitcoin.
Exactly. All of these factors can influence how investors perceive Bitcoin and its long-term value.
So it's a lot to keep track of.
It is.
It's kind of like trying to predict the weather.
Yeah.
You know.
That's a good analogy.
You can look at the current conditions, but there's always those other factors that could just like totally change things.
Exactly. You never know what's going to happen.
So with all this in mind, what's your like final takeaway for our listeners who are trying to like wrap their heads around Bitcoin and its connection to the economy?
You know, I'd say the key is to stay informed and be prepared for volatility.
Oh, yeah.
You know, keep an eye on those major economic reports.
The jobs report, inflation.
Yeah, the jobs report, inflation reports. But also pay attention to regulatory news and technological developments in the crypto space.
So basically, stay up to date on everything.
Yeah, as much as you can.
Yeah.
Understanding these different forces can help you navigate the exciting but sometimes unpredictable world of Bitcoin.
Very unpredictable.
Yeah, for sure.
Okay, so great advice.
Thanks.
To wrap things up.
Yeah.
We've learned that Bitcoin's price is influenced by a whole bunch of different factors.
It is.
Interest rates, inflation, government regulations, and technological advancements. It's a lot.
It's a lot to consider.
We also learned that this week's jobs report could be a really big deal.
Yeah, a pivotal moment.
Potentially pushing the Fed to make a decision on interest rates.
Right.
That could have ripple effects throughout the market.
It could affect everything.
And even if we get those rate cuts that some people are hoping for, it's not a guaranteed win for Bitcoin.
Not at all.
There are always other forces at play.
Always.
That could shift the balance.
You never know.
Well, this has been a fascinating conversation.
It has.
Thanks for joining us on this deep dive into Bitcoin and the economy.
Always a pleasure.
And to all our listeners out there,
stay curious.
Stay informed.
Stay informed.
And maybe keep some antacids handy.
Yeah, you might need them.
Just in case.
In the world of Bitcoin, you never know.
You never know.
Thanks for having me.
All right, everybody. Until next time.